We're discussing the Tesla earnings call that is going to happen tomorrow. This is a prelude. We have those discussions before and after earnings. And the main reason, of course, is to see what we can learn from this event. This is always an interesting event when a company reports earnings, and we are not too focused on the numbers themselves, such as EPS and sales. Not that they don't matter, it's just we don't have a competitive edge in estimating them and also making money with being right or wrong about these things. What we are is long-term investors in a situation that we're trying to understand, and we're using every information event that we can to better understand the situation of Tesla. And this is one of them. So this is why we're doing these things. The purpose of this podcast is to give people a sense for what it feels like to run a hedge fund. And I think there's nothing more important than having these types of episodes where we discuss our thoughts and our approach towards our own investments. I think this is hopefully where the rubber meets the road for people who are interested in this business. As always, this is no investment advice. Please do your own research, and this is not meant to solicit any investors. All we're trying to do here is hopefully educate people how to process information. And again, it doesn't matter which stocks or which assets you're invested in. What matters is the approach. This is what we're trying to come across. We're going to look at our preview, and then we're going to look at the actual report. And we're much more interested in the conversation. We're interested in the feel of the conversation. Those sort of things are more important to us than, for example, if they miss EPS by X or sales by Y and that kind of thing. So this is not even a podcast. It's October 17, 2023. This is Crimtelco. Since the last update, we are flat. The market is up roughly 80 basis points. For the year, we are up 118.5. The market's up 13.5. And we're up by 105%. Just real quick, today we have a bit of a sell-off in NVIDIA, and that has to do with the Chinese restrictions. NVIDIA is exposed to China. It is a large market for them. Of course, it's already pretty restricted, and unfortunately, the political turmoil between China and the U.S. has implications for NVIDIA. They just won't be able to sell. They won't be able to sell chips into the Chinese market, or maybe even to companies here in Silicon Valley. There's a lot of companies here in Silicon Valley, Chinese companies. So we haven't analyzed it into detail, but this is the risk, just to give a quick update. But let's talk about Tesla earnings. So tomorrow after the close, October 18th, we expect Tesla earnings. And what is the conversation we expect? I think number one on everybody's head, on top of everybody's thinking, is of course margins. The company is lowering prices across the board and hopefully also lowering costs. So the margin question is not obvious, but we do expect a hit to margins, automotive margins, because of lowering prices. Now, why is Tesla lowering prices? It's because they want to be a volume player. It's because they believe that the more volume they can bring on the road, the better also the monetization will be later on through FSD and things along those lines. Now, FSD itself, of course, is a controversial issue. In other words, are they going to be able to actually deliver FSD, and if so, at what price? But I think this is the first point we want to make, that no matter what, it is better for Tesla to have volume on the roads, and there's three reasons for that. Number one is the repeat buying experience. Tesla is very high. So once you own the Tesla, it's very unlikely that you're going to switch to another car. So the more people you convert, the more long-term customers you have. Second, you can, of course, through volume, lower your margins. You can utilize a lot of the infrastructure that you're building, such as factories, battery management, battery development, and also charging network, and the software that you're building. Don't forget, Tesla is a software company, and software is a numbers game in the sense that if one person uses a piece of software, it's very expensive. If millions use it, the unit becomes very cheap, and the marginal cost of delivering, one more software application to a customer is zero. So the more customers you have, the better you are off. And I think Musk's comment in either the last or the one before earnings calls that he can even sell the cars for zero profit and still make a lot of money was taken as a sort of negative by Wall Street. But it's not such a negative because, again, Tesla is a software business. More units sold means you can amortize your software across more people, and that lowers the cost of software development, which is not a big part yet relative to the cost structure of the company, but it certainly is going to become a bigger part of the profit pool. And this brings us to the third point, which is FSD. Now, FSD might be controversial, or it's not worth, or it might be worth more or less. People, it's almost religious. Our view on FSD is that it's mispriced. It's $12,000 is too much for what it is. However, it's incredibly useful. So we have to find the right price point. It is definitely useful, but again, it's a little bit expensive, and also you can't transfer it from car to car, things like that. So we don't want to get too much into the weeds of how it's priced and what the structure is. But I think it's worth talking about generally that FSD is a useful product with a good return on investment for customers and a good return on investment for the company. So that this, I think, is the baseline. What they do with it, assuming there's not too much unforced error, we should expect Tesla to monetize FSD one way or the other. So to summarize, we believe that the earnings call will be centered around the volume question, and the volume question has implications on the margin question, and that will be sort of those two vectors will have to weigh it out. Like, okay, we want to grow 50% per annum, which they still are, even though they're now year over year only growing in the 30s volume, but over the 5-year horizon they are growing 50%. We want to keep that, and we're going to sacrifice near-term margins for long-term profitable growth. I think this story is still intact. We said that there's 3 major factors that drive margins even with lower prices. One is amortization of the infrastructure, second, amortization of the software, and third is FSD. Now, before we end this episode, maybe just a few more comments on what we expect tomorrow. So we expect conversations about Cybertruk. We expect conversations about China. We expect conversations about vertical integration, in particularly upstream, such as mining and the charging network and battery production. We expect a progress report for 4680. So those are items that are important for the company that we expect as semi updates. So the semi is an important piece of the puzzle, very profitable if they can produce the semi at scale at those specs and at a certain price level that is reasonable. So there's a lot of reasons to be excited about the company with these things going forward, but those are future things. Even if the Cybertruk gets sold this quarter, which we hope will happen, of course, it will take time for the Cybertruk to become a material contributor to the P&L. We believe the Cybertruk is a game-changing product, a product that will redefine the roads and the culture of this country. So this is definitely a very exciting product. And sometimes in the markets, people get a bit complacent, even lazy in terms of, the Cybertruk is all priced. And no, it's not priced. Once they start doing 10, 20, 30, 50,000 per quarter and then 100,000, and the numbers actually show up and there's good contribution margin, that will make a big difference. So again, we believe that the conference call will be centered around the question volume versus margin. We are on the on the side of the company. We agree with the company that driving volumes at the cost of near-term margin is worth it because there is upside for margins going forward with higher volumes. And then we expect other discussion points such as Cybertruk, vertical integration, battery production update, 4680 production upgrade to be precise, and semi, and of course Cybertruk launch. Those are the things that we expect the company also to come up with information about. Thank you.